This is TVC News Hour. I am Uli Data with business update. The South Africa Chamber of Commerce and Industry is proposing that the country be divided into 4 time zones to help alleviate the lingering power crisis. Acting CEO Peggy Drosky says the power is no longer an Eskom problem, but a national issue. She said the 4 time zones would be a temporary solution that would stagger the workday starting times in the provinces. Drosky said this would help minimize the problem and relieve pressure on the grid. The chamber suggested that another immediate solution was to allow businesses to operate in shift without compensating labor for working outside normal hours. Drosky said long-term proposals included privatizing Eskom, inviting foreign investors to build power stations ranging from nuclear to solar and wind power, and to reduce the reliance on cross-subsidization of services from income to electricity. A forensic audit on Nigeria's missing oil revenue has shown that a minimum of $1.48 billion is missing from the Federation account. International audit agency PricewaterhouseCoopers says the Nigerian National Petroleum Corporation and the Nigerian Petroleum Development Company should make the refund. It also faults NNPC's mode of operation, which it feels is unsustainable, and advises that the corporation be urgently reviewed and restructured. Laura Monijo reports.
The investigative audit assessed allegations of unremitted oil revenue into the Federation account in January 2012 to July 2013. A breakdown of its findings shows that over $20 billion was expended by the NNPC and NPDC on subsidy, third-party financing arrangements and equity crude processing, as well as costs directly and indirectly attributable to domestic crude. Others are signature bonuses, petroleum profit tax and royalties, which are yet to be paid by the NPDC.
There are some expenditure within the expenditure of NNPC that they say should be clarified to make it justifiable. But there are legal issues, legal interpretation to them, until maybe the Minister of Justice or whoever has given interpretation of that, we assume that they are legitimate expenditure. Because we cited a law giving the NNPC to spend money and then remit the balance. That law is cited there. And so that's why they spend that money. And if you look at the recommendations, PwC is saying that if it is that condition, then it should be legalized.
The audit says the NNPC is unable to sustain remittances to the Federation account and meet operational costs from crude revenue. It has therefore incurred third-party liabilities to bridge the funding gap. The audit also seeks clarifications on if the corporation should be making first-line deduction charges before remitting crude proceeds to the Federation account.
PwC therefore recommended that the NNPC model of operation must be urgently reviewed and restructured, as the current model, which has been in operation since the creation of the corporation, cannot be sustained.
Findings also showed that only $100 million from the NNPC's portion of 8 oil leases valued at $1.85 billion had been paid to the NPDC. The audit also faults the transfer value, which it believes should be higher. The consultants advised that the NPDC remit dividends to the NNPC and Federation accounts based on its dividend policy. Total gross revenue from crude lifting during the review period was $69.3 billion. This was higher than the $67 billion stated by the Senate's Reconciliation Committee. Total cash remitted into the Federation account in relation to crude oil lifting was $50.81 billion and not the $47 billion disclosed by the committee. Lara Monijo, TVC News, Abuja.
Arik Air of Nigeria has extended its operations to Ivory Coast. The airline says it will commence scheduled flight operations this month from Lagos to Abidjan via Cotonou, Benin Republic. The airline says the new service would operate 4 times a week. The International Monetary Fund, IMF, has approved a 1-year precautionary loan program of about $700 million to Kenya. IMF Deputy Managing Director Nayuki Shinohara says the East African economic powerhouse will not use the money except something unexpected happens, such as security concerns like the Al-Shabaab insurgency and market volatility like the oil price crisis. The Kenyan government says the fund will serve a cushion to support its economic reforms, while the IMF adds that it will also save the country from defaulting in paying its bills in case of negative events. Terrorist activities affecting the country has already reduced its gains from the tourism industry. Negative trade largely features in market across Africa at the start of businesses on Friday. Their trade pattern shows reduced activities in many of the exchanges as investors are believed to be cautious on orders. Starting with market in Botswana, it opens high as marginal increases in prices move trade in the positive direction. The report says financial and manufacturing stocks take investors' attention. In Egypt, the stock market opens in the red. The oil share index has lost 80 basis points. Analysts said appetite for investment is low. The Ghanaian stock market opens low following weak transactions. The market has been low since the beginning of the year. The Nigerian market opens negatively as nearly 5 basis points are knocked off the index. The low trade spreads across sectors. And oil prices have improved in the world market following dealers' readiness to pay higher premium on key brands. At the London market, the Brent trades at $57 per barrel, rising above 2% within 24 hours. For the OPEC basket, crude price hit $52 per barrel, showing steady rise for 3 days. And that's it in Business Update. I am Mulie Misi Dada. We'll return after this break. Stay with us.